Good evening all. Ira Epstein of Linn Associates on a washout day in the futures markets, especially the metals. This is Thursday and we're at the 17th of June 2021, about 5:25 in the afternoon. So let's talk about what I told you yesterday. After the FOMC. When I did my nightly review, I said there's a yin-yang impact, and most brokers don't explain this to their clients. What happens is we come out with a report from the Fed, 1 o'clock Central Time, 1:30 begins the press conference, wraps up often at the 2:20 time frame. What time is that in Asia? Middle of the night. They're sleeping. What about Europe? Well, it's somewhere between approximately 7:30 and 8:30 at night in most of the countries there. Their markets, they're not looking at them. The yin-yang happens as the Asian people wake up. They start looking at what's going on in the U.S., and one of three things is going to happen. They're going to get their own take on it and go the other way. They're going to agree with what happened, or they start panicking from what the report is. What happened in this case was the market started the panic the other way. In other words, it not only saw what the U.S. did, there was a complete dumping. I cannot tell you that the FOMC meeting was intended to do this, because I don't believe it was. The Fed chair is hoping to get inflation up, and if you looked at the Bloomberg index of commodities today, it's one of the biggest down days in recent times. You were down almost $1 a bushel in soybeans. You're down dramatically in the metals. You were down $300 an ounce in palladium today. Copper down 21 cents a pound. We're talking monster breaks. For those poor people that don't listen to what I teach and they decide they're going to buy Bollinger Bands on the low point because they're going to bounce, or sell them on the top, this is just what happens in these scenarios, and they wipe you out. It's not the way to trade them, and I talk about it in my course. I'll talk about my course at the end of this for you. In the gold, you have pulled back to the zone of the 18-day average of closes, right here. So we had that rally. Now, what did I go through with you yesterday? Yesterday, when the market was here, I went through the fact you got under it, you came back, and then you had a move. You got over the 18, now it hasn't tested it. I know I said that. Look at yesterday's video. I didn't know if it was going to test it today. I have no way of knowing that. I don't have a crystal ball, but it's not uncommon. So on this test, if you don't get under these lows, this could be an interesting area for the market. That's my point. When we come and take a look at gold today, this was the close of business Wednesday. And the market had come all the way back up here. Remember, I told you that's false. And that's because that represents a 12:30 time. And that 12:30 time, the market trades to 4 o'clock. It was way down here. This is what the market did today. It opened about where the last trades of the day were, as the market was waiting. Remember, we opened at 5 o'clock at night. Then you're waiting for the Asian trade to come into it. They start pressing, and then Europe really pressed. It came into a rout to the downside. So it's a market that's gone from 1920 or thereabouts down $150 an ounce back to the 1770 level. What about key moving averages? We'll see them in a minute. Coming into all this, this is how the market looked on the close Wednesday. There's nothing bullish on that. This is what it did today, and this is where you're at tonight. The market sliced through in time. It hung around. You can see the 200-day average. But we knew already by the close yesterday that the close of trading, not settlement, when markets finished, it was way down there. And today the question is, can it hold on to the 100-day average? And it didn't. But you are back into this whole level of support. Am I looking for a further washout? I don't know what margin calls are going to do. They're going to be excessive tonight. They're going to be people that on every rally just want to come out because they don't want to throw more money at it. They're frustrated. They're not trend followers. They believe you just buy gold. It's an investment. Okay. When I look at Bollinger Bands, you're way out of them. Now, how many days? Not here. So The first day out of it is actually on the close of business today, Thursday. This is Friday. Look for the resistance back at the 1800 level, the combination of the 100-day average and the Bollinger Band. That's the first resistance I see, and you're nowhere near embedded. So it's a money washout in the market. Does it change things? It might. The Fed wants that inflation, but the idea that interest rates are going to climb, even though they're only talking 2 raises in 2023, traders are going, if they're saying that, they're going to move it to 2022. I don't know what's right. What I do know is that was the washout in the market, and now I go like this. Well, that makes life interesting. Am I going to get some value plays down the road? The gold-silver ratio, well, I would expect that it gets whipsawed, and it did. Now, this is where it closed on, let's go to Wednesday, right here. Here's the first retest of this number. We just talked about this yesterday. You either break through the low here that I'm pointing at, or you can come back and there's your retest. I don't like that it got all the way up over that, so I'm a little nervous with that, but I'm not trading it anyways. I like the silver chart better than the gold chart. Why? It's holding the 100 to 200-day average, oversold the same way, not even in a trend. This is a vertical price decline. You've gone straight from 2844 in 4 or 5 business days to under 2600 in this market. Whoa, what power of a break and how you took people out. This has become now a top area in the marketplace. I wish I could say it was the other way around for you bulls, but it isn't. Now it's a top area. Copper annihilated today. The market got down today alone, 20.7 cents. It was up a bit yesterday. The day before it got hit pretty hard at 19 cents. So you've had a heck of a break, and I think this 100-day average could become an interesting number. I want to see what the market does. I am not of the school of thought that copper is going to see more supply. Out of China when they release reserves, yes. But you don't have enough copper mines coming on for normal demand, let alone after a pandemic demand. So I consider this a change, but not long-term bearish. Am I a chartist? Yes. Is the chart bearish? The chart's nothing. Chart has a higher high and lower low. That's how I'm viewing it right now. Platinum market. Platinum market has been staying under this 18-day average. So there's not been an upside bias. It crashed. This is, let's go to Wednesday. And it tried to hold the Bollinger Band. Remember the word yin-yang. Boom. Away you go. Now, when we in the U.S. get a 7:30 in the morning report or a 6 o'clock in the morning economic report, the markets elsewhere can absorb that. Think of the time in Europe, they're still open. Asia, a lot of traders are still hanging around at that point. It's the afternoon reports in the U.S., a big one from the Fed that you always got to worry about if the markets decided it's an important report before the report comes out. And everybody was glued, is the Fed going to say anything on changing timetables or taking its foot off the table on the talking about raising rates? I didn't think they were going to talk about rates hikes. They really didn't. They said they're going to consider talking about it. So nuts. But away you go. I had one of my brokers call me yesterday, and I'm so glad he did. He had a client that going in wanted to buy this market, and the client might have yesterday. And it was up, and I'm going today. I'm going, I hope he took profit if he got in. They had written me, should you buy? And I said, no, I don't think you should go into the report. This is what it did, and I got the nicest letter. And it said, thank you for your wisdom. This is a monster break, $325. You can't stand out of the way. Remember what I told you the algorithms do? You've just got to be careful. You've got to learn in trading when to pick up the chips and walk away for a little bit and then come back. This is not gambling. This is trading. There's always another trade. There could be a week, more than that, go by when I don't see a thing to do. And then there's so much to do. I'm writing until when I normally should get my report out and putting out so many recommendations. I'm hoping my clients have the funds to handle them. They don't have to follow everything I say, but it comes in waves. Right now, I'm the proudest guy to say I have my subscribers in cash. That's what I want to say. higher lows, higher highs, bull market play, a surprise in the amount of strength. It is powerful. I don't know what it's going to do from here. Ethereum got smashed as everything around it fell right back down to the lower Bollinger Band. So the theories here are still working. The 18-day average is the resistance. And when I talk about the theories with you and everything that I want you to do, it's so simple because we have a charting course. Now let me explain how this all works. I love to teach, and the way I do is I believe that everything builds on everything else. I learned in school, and it took me until my later years in college, and then I went on for other degrees, that don't turn a page till you understand what's on the page. And I didn't have to cram for things any longer in my life, and I did well. But it took me forever to get to that point. Well, that's how I teach in the videos. Go over these videos. It's not a race. There's 8 hours of them. Believe me, you'll knock them off if you're serious. 15 minutes a day, you'll get through it. You'll understand it. 1, 2, 3. Then go back for a final review. You won't be cramming. You'll get it. I'm going to teach you 5 indicators. They're simple. Each one builds on the next, and each one is a filter of the next. So you're first going to get graphics on a PowerPoint. Then I'm going to bring up a real chart. And in many of the cases, I hide the complete name of the chart and even the values. I want you to learn the pattern. I want you to learn how a swing line works, how you filter it with moving averages, how you take from there and you're going to apply the Bollinger Bands, how you're going to apply the slow stochastics with it, and the window envelopes. Where do they come into play? 5 things. Not difficult, believe me. So you're going to get access to that. You're going to get the charting software with the data, so you can go back, and this is all real data. You can follow what I do. And then you're going to have the morning subscriber video where it's like sitting with me. Oh, look what Ira's talking about. There's the swing line. I just learned that. There's the window envelope. Look what he's doing, and that's where I picked that up. To find out more, just go to our website under the word education. This is not an expensive course. I think you can learn a lot. I'm Ira Epstein. You have a good day.